During the first 3 months of this year, Equity Bank total income rose 9% to 16.5 billion shillings, while total cost reduced by 1%. This was among factors that helped the bank post a net profit of 5.9 billion shillings, up from 4.9 billion shillings during a similar period in 2017.
Incomes are growing by 9% and costs are declining by 1%. The profit margin, Joe, is widening, resulting in a profit after tax of 22%. And this, when you translate this in ratios, you start seeing return on equity. Kenya now is bouncing back to 31%.
Equity Group CEO James Mwangi attributes the good performance to non-funded income, which grew 41% and a 65% increase to 1.5 billion shillings in the contribution of subsidiaries to the bottom line of the group.
To that, to three things. The being customer-centric, focusing on delivering the best customer service we can. I also attribute this to our innovative approach to banking. And lastly, above innovation, is the regional approach. We find Uganda, Rwanda, Tanzania, and DRC growing much faster, maybe 4 times faster than Kenya, because the environment is appropriate without interest capping.
He says the adoption of IFRS 9, which requires banks to assign risk elements to government securities and trade finance instruments, is eating into the bank's profitability.
IFRS 9 provided that for existing stock of loan book, you make a one-off adjustment on of potential or probable future loss and adjust it against retained earnings.
He noted that if the cap on interest rates is removed, banks will profile the risk of each borrower, with risky ones charged higher interest rates.
So for the ones that we have and whose risk is below 14, they can expect to continue to pay the interest rates of 14. It is those whose risk is above 14, like 18 or 16, who we would like to accommodate by pricing that risk. And the only thing we do is price 16 and add a return on capital of 2%. That's all. So the maximum I can see us charging will ever be 18 for the very risky one, unsecured.
Diaspora remittances rose 18.6 billion shillings, up from 3.2 billion shillings in the corresponding quarter.